Philip Stoughton. Welcome to EMS and the Economist with Shawn DeBravac, Chief Economist of the Global Electronics Association. Shawn, great to see you. Thanks for taking the time today.
Yeah, glad to be with you, Phil. There's obviously a lot happening in the economy right now.
Yeah, so much happening and so much happening that's having different impacts. One of the things that popped up on my radar recently was your report that you refer to as the memory squeeze and what's going on there with AI kind of sucking all the oxygen out of the semiconductor supply chain. Just give me an overview of the findings of that report.
Yeah, we took a look at what's happening in the memory market. We also took a look at how our members are perceiving the memory market, what they're seeing, and consistent with what you see in many of the headlines, their price pressures are up. We're not seeing necessarily as much pressure on availability as we might have expected, but definitely you do see price pressures up. And then if you just look at data from the last month, you see really strong production in the electronics industry globally, much of it being fueled by AI. So AI is definitely sucking up the oxygen in the room. They're definitely getting the scarce resources, memory being one of those, and taking advantage of it. So that the thirst for data centers, the thirst for AI capabilities continues to dominate a lot of the global themes in electronics.
Yeah, when we look at that, it's that supply side of the global electronic supply chain that is, when you get back to semiconductor, it's tied down to a very small number of companies and a very fixed amount of capacity that can't easily be changed. It's a big challenge, isn't it, that we face structurally in the industry, and that global geopolitics can add another layer of concern to that.
Definitely, yeah. I mean, there's obviously lots happening in the global economy and a lot of uncertainties, which are putting pressures on manufacturers everywhere in the world. And I would add that it isn't just a couple of large companies that are controlling many of the themes, but it is also you even see it playing out in what's happening in countries. So there's obviously, if you look at, for example, Taiwan's export data from the last month, they had very, very strong exports, especially when it comes to tech. The bulk of their exports now, unsurprising to anybody listening to this, is electronics. And so you do see significant concentration in certain regions of the world, which is just one more factor that manufacturers everywhere need to be cognizant of and watchful of.
It almost exposes a bit of a weak point, which we're seeing in various different places. One of obviously the elephant in the room is the Iran war and the impact on the Strait of Hormuz, which is having multiple impacts, one of which is the rising cost of energy, which seems to be a real concern, particularly here in Europe, where energy costs were already something that manufacturers were quoting as something that makes them less competitive. The fact that that's going up, the fact that it seems to be rising, and a sustained rise seems to be something that it's not easy to see a solution to. How do you see that playing out? Do you see it as something that is short term around the situation we're in, or do you see it something that is ecosystemically problematic that we need to actually address?
I actually think that I don't know that it's a structural problem, but the impact from higher energy costs is not going to be a short-term problem. Obviously, we saw significant spikes in oil pricing right after the invasion, when there was what I would call the cloud of war, made what was happening in the oil market and in the broader energy market uncertain. Well, some of that has settled, and you've seen the price of oil decline from the peak. The expectation is that oil remains elevated through the remainder of the year and into 2027. So right now, the futures market suggests we're at least $10 a barrel higher than where we were pre-pandemic. So the markets are telling us that the uncertainty around the global energy markets are going to remain intact for some time. I actually think that there is some risk and there should be some concern that the impact will be much bigger and broader than a lot of people anticipate. As you see, even in the news today, things have become exacerbated over the last 24 hours. And so the markets seem to have, they want this, kind of calming effect. They keep wanting to discount the downside risks, and anytime there looks like there's some agreement around a ceasefire, then you see the markets rally. So the markets are really wanting this to resolve quickly. I think they are overestimating how quickly this will be resolved. I do not think it will be a quick resolution, and you see the residual impact in the energy market. What's most interesting to me is that the electronics market has largely been able to shrug this off. I mean, you've had still very strong output numbers in electronics over the last month. If you look at production in the U.S., we're looking at, depending upon the series that you're using, we're looking at all-time highs in some series. You've seen very strong exports, as I already noted, in many of the Asian countries that have a high exposure to electronics. Obviously, part of this is AI. Part of it is also defense. So all of the defense categories are doing well. And so I think we're going to have this, this dynamic over the next at least 8 months where the cost of doing business is higher. The uncertainty around business will be more acute, and yet it doesn't appear evident that this will be a significant headwind for electronics, partly because a couple of key categories within electronics manufacturing are doing very well. Again, AI and defense. I think outside those categories, if you look at consumer electronics, the headwind there will be stronger because higher energy costs end up impacting consumers' willingness to pay and consumers' willingness to buy. So there's this unique dichotomy that's playing out right now.
Yeah, it feels like the more negative pressures coming from the supply side, and the demand side seems quite robust, but particularly robust, as you mentioned, in those sectors. I mean,
I think manufacturers need to be ready for a higher cost of doing business. Shipping costs are higher, insurance costs are going to be higher. Like that will spill over into markets that aren't even impacted by the Strait of Hormuz because it pulled things out of balance, and so there is a cost to that manufacturers will incur. Obviously, the energy costs pass straight through, and so you're going to see higher airfares, you're going to see higher transportation costs, like all of that. The costs of material will be higher. This is, I think, broadly inflationary, and I think that the residual on that inflationary pressure will last much longer than a lot of people anticipate. And at the same time, if you're in the right categories, you're doing still quite well, and you'll be able to weather this storm, I think.
Where do you see the impact in terms of the global economy as we look at global GDP growth with respect to what's going on in Iran? Do you see it as something that is slowing growth generally, and, as you say, impacting more perhaps on the consumer side as prices rise?
I think it definitely impacts the global economy simply through the impact that higher energy costs lower global GDP growth. And so, there's this unique dynamic in the U.S. right now where, because we've become a net exporter of oil, while we face higher pricing, we don't have to face the same type of shortages that we might have been impacted by in the past. That's not true for markets in Asia. That's Generally not true for Europe. I think the higher costs of energy will be more detrimental to them. You're probably looking at maybe 4/10, 5/10 lower growth in the global economy as a result of
Yeah,
the higher oil prices, and some of that depends on, excuse me, where the oil prices end up
yeah,
settling at at $10 to $20 a barrel higher. You're probably looking at global growth that is 2/10, maybe 3/10
yeah,
lower, as oil prices kind of hover in that $90 range. Then you're looking at global growth that's probably 4/10 to 5/10 lower,
yeah,
and so it is detrimental, and it does end up crowding out spending on other categories when you look at consumer spending. And so
yeah.
that's where I think consumer electronics are going to be most vulnerable when you've got U.S. consumers that are now spending an extra $40 to $80 a month on gasoline. Then
Yeah.
they're not spending that in other categories.
And we seem to be going through this stage of rewriting a little bit the playbook for global trade, and that just seems to be an underlying trend of the Trump presidency, the Trump era. Do you see that ongoing? Do you see that as something that is almost a legacy of this era, or do you see that as something that is, just during this term and quite temporary?
No, I think it's ongoing because I think what ends up happening is once you start to move your supply chain relationships, then these are dynamics that have a lot of
Mm,
inertia, and so once you start to move things, then the momentum starts to pick up, and it's just natural to kind of continuously reconfigure supply chains.
yeah,
And over just the last couple of years, you've obviously seen the U.S. exposure to China trade decline significantly. You've also seen the European dynamics there increase, so
mm,
they're more reliant on China now as they've
yeah,
filled in some of that. You're definitely going to continue to see shifts take place, and at first it was let's move some manufacturing capacities and capabilities quickly, and really that was almost a reallocation or a resorting just to work around the tariffs that were put in place in the
mm,
U.S. And then because you've started that momentum, you start to think about, okay, what does our long-term footprint look
yeah,
like? Where does it make sense to manufacture? And so I think you just simply will keep that momentum going.
yeah,
They're still pushing the U.S. to build out more manufacturing capabilities and capacity. Now it has come down from what we saw. We peaked
yeah,
in kind of the August September timeframe last year in terms of and new construction coming online and investment in new construction. That has come down, but we're still 1.5, 1.7 times what we were pre-pandemic. So there's still a lot of momentum there. It has slowed, but still happening.
yeah,
And then I think globally, companies are looking at how do I recalibrate my supply chains for a new world order. And so I do think even without any further action, and there will be further action, but even if we didn't see further action on the tariff front or on the trade front, I think you'd continue to see things shifting because the momentum has started.
yeah. No, I absolutely agree with you. I think people looked at the short-term solution, they managed that, and then they looked at the structural change and what they wanted to do long
Yeah.
term. But they also looked structurally and thought, well, how do I build in more agility for the future? How do I build in more adaptability within that footprint? And I've talked to a lot of EMS companies that have said very specifically, it's great that we have manufacturing in multiple locations, but now we've got to build the muscle that we can actually leverage that and move jobs from one to the other quickly and make sure there are lines qualified in more than one location specifically for certain market sectors. So yeah, I do see that as a long-term change. And as you say, politically, there's been a lot of changing relationships. You mentioned the relationship between the EU and China has changed because there has been a necessity to do that because of the changing relationship with the US. So yeah, a complicated dynamic, but it's not one that'll just go back to normal very quickly.
No, and
Um,
I think the easiest place to see that right now is around automotive. Like Europe
mm,
has these competing goals around, green objectives that would
mm,
suggest they need more EVs, and the demand for EVs remains high. It obviously has
yeah.
slowed in the U.S. as some of the policy tailwinds have reversed. It remains pretty strong in Europe, and and so on the surface, that would suggest we that Europe should open up more imports of Chinese produced
Chinese EVs.
EVs,
Yeah.
right? Lower price points. They're obviously being heavily subsidized by and through China, through manufacturing initiatives there. And so you can achieve your green objectives
Mm,
and do so at a lower price point for consumers. But the challenge is you end up risking eroding the strength that you have in your domestic capabilities and your domestic
yeah.
production that impacts places like Germany and Sweden
In an
and obviously,
industry that was massively important.
yeah.
Yeah.
So I think if you just look at that single issue, it suggests that there isn't resolution yet in Europe, and that's
No.
something that will have to be sorted out.
Yeah, there's definitely work to do there. And I spoke to Alison James, your senior director in Brussels, on that topic just a week ago. And there are definitely instruments coming in and things in place that will require a certain amount of those products to have systems and subsystems that are manufactured in Europe to have that kind of made in Europe stamp. So it is that complex dichotomy and complex situation that these different dynamics are impacting on. Huge data program that you're building out within the Global Electronics Association. We often talk about where you are with book to bills and where you are with with respect to the sentiment reports. Give me a snapshot of where we are recently, and just a quick overview of how Global Electronics Association is committed to kind of building on that muscle and actually furthering that insight that you provide.
Yeah, and on that point, the association is definitely building out its capabilities globally, and I think that's important. You see it broadly from the association as they've established, offices in multiple areas and regions of the world,
Mm,
and it really is, it's very fitting of the rebranded association is the
mm,
Global Electronics Association, and you see that in the membership figures and in the membership base. You also get a feel for that for where the offices are showing up and where the work is being done. And so,
mm,
and we're working to make sure that the data that we're capturing, the data that we're providing, is indicative of that global nature. And so,
mm.
obviously, there were acquisitions of data programs in Europe and staff that have been added in Europe to build out capabilities there. We're seeing it show up in other parts of the region, and there are more
Yeah.
announcements to come here imminently about the efforts we are making to build out the data availability to make sure that we are providing the insights that manufacturers need, and that at the end of the day,
Mm,
we can become a single source for truth in what's really happening in the global electronics industry. When you look at our monthly sentiment data, when you look at the book to bills that we publish for not just the U.S. but for elsewhere, it aligns with this sentiment that I led with, which is despite a lot of the headwinds, you
mm,
do see a lot of resiliency in the market. Sentiment has not really deteriorated in a meaningful way. I think it goes back to, if you're in a couple of these areas, if you're benefiting from the AI investment, if you're benefiting from defense, then things are looking okay, despite the fact that you're now operating in a more costly environment. There's more uncertainty. It's obviously a more difficult environment, but you are seeing strong throughput, and
mm.
that also, I think, is reflected in what we're seeing with the respective book to bills, whether we're looking at PCB or EMS, is that you do see momentum there as it relates to demand. I think if you look underneath the surface, what's interesting is, despite some of the strength, we've seen a decline in manufacturing, in the manufacturing workforce in the U.S. broadly over the last year, and so there is this push towards higher productivity, higher output per employee. I think this is a story that is playing out everywhere. Especially as you deal with higher costs, higher shipping costs, higher input costs, you're looking at controlling costs elsewhere in your production.
Yeah, I think it's fascinating. As I said earlier, I think that underlying demand is robust. We see different industries peaking at different times, and different industries struggling at different times. But the underlying trend seems to be strong. With respect to all the work you're doing in data, I think that's really exciting, and it just feels to me like the Global Electronics Association should be the place where all that data resides. And the more data there is in one place, the more we can interrogate that data collectively in a meaningful way for almost every individual member, which I think is where it gets really exciting, not just these very large, very complex and cumbersome reports, but to actually be able to look down into the data and say, hey, this is how it's impacting you and how it might impact your strategy or your approach to a certain market over the next 12 months. And that's where you go from data to insight and from insight to value for your membership. And I think that's hugely powerful. Shawn, always a huge pleasure to chat. Thanks so much for your time again. Look forward to next time. But in the meantime, thanks so much.
Thank you, Phil.